Hello everyone, I am Celine Sener. Today I will present you my financial analysis on Aedififca. Aedififca is a real estate company specializing in healthcare real estate such as nursing homes. After analyzing some ratios between 2022 and 2024, I will conclude if it is worth investing in this company. Let's start with the liquidity ratios. The quick ratio measures a company's ability to meet its short-term obligations with its most liquid assets. A ratio above 1 indicates good liquidity. Aedififca's quick ratio is decreasing, but it is still above 1, suggesting it can cover its short-term liabilities without selling inventory. The current ratio measures a company's ability to pay off its short-term liabilities with its short-term assets. A ratio above 1.5 is generally considered healthy. Aedififca's current ratio is slightly declining but remains within a healthy range. Now let's look at the solvability. We are starting with the debt to asset ratio. This ratio indicates the percentage of a company's assets that are financed by debt, and this ratio should not be over 70%. A lower ratio suggests less financial risk. If you look at Aedififca's debt to asset ratio, it is increasing from 38% to 40%, but it is still a good percentage. The equity ratio measures the proportion of a company's assets financed by shareholders' equity. This is a very interesting ratio for investors to see on how much the company's assets are financed by their money. Higher values indicate less leverage, which also means less financial risk. We can see that Aedififca's equity ratio is decreasing from 62% to 60%, suggesting increased leverage. Lastly, we will look at the return on equity. This measures how effectively a company generates profit from shareholders' equity. Higher return on equity indicates efficient use of this equity. Aedififca's return on equity is increasing from 10% to 11.1%, which is a positive sign for profitability. Now to answer the question, should you invest in Aedififca? If we base our opinion on the ratios we have calculated, we can see that the liquidity is slightly declining but still healthy. The solvability is slightly increasing but still under 70%, which is also healthy. And the profitability, there is an improving return on equity, which is indicating better returns for shareholders. So in conclusion, if you want a small but stable income from your investment, I would advise to invest in Aedififca.